All right. Well, good morning. Good morning. Hello, everybody. My name is Daniel. I'm with VantagePoint AI, and we are going to get things kicked off with our live today. We're going to be talking about stock options with AI to reduce time decay and save on premium. We will be talking about strategies related to options trading like that, as well as doing some market analysis. I think everybody could appreciate doing some market analysis today, so we'll spend some time talking about the Dow, the NASDAQ, the S&P. Just want to make sure everything is working first. Make sure you can see my screen and you can hear my voice okay. If you can, do me a favor and just let me know in the chat that you're here and available. All right, got people joining live now. Hello, dear daughter. Nice to see you. Glad you're here. Get things set up. Today is September 10th. It's a Tuesday. I can't believe it's already September, by the way. It's been pretty fast-moving year, if you ask me. No doubt about it. It's been pretty incredible. So, DJ, good. Jonathan, good. How's it going? Glad everything is good. Peter, good morning. Loud and clear. Thank you. Thank you. Sending a heart your way. We're going to get started here. Get things kicked off in a big way. First of all, we got some things to be on the lookout for this week. I think everybody knows we got CPI coming tomorrow morning. I think there's a debate tonight to think about and consider. So a lot of fundamental type stuff happening in the markets, just to keep in the back of your mind, of course. Nothing too drastic or crazy from my perspective, but some things to keep an eye on. Let me share my screen here. I'm just going to pop myself into the corner, and there we go. I'm pulling up the VantagePoint software, and the reason I'm pulling up the VantagePoint software is so that we can do some quick analysis on VantagePoint, on the artificial intelligence. I don't come onto this session to provide trading advice or tell you what to do with your money, but part of VantagePoint is an education piece. I want to make sure you understand what VantagePoint can do for you and help you understand and interpret it, whether you have the software or not. I'm going to start from a very basic place and then we'll build up from there. So if you have any questions, I have the chat box pulled up. Hey, Chris, Nicholas, looks like everything's working from an AV standpoint. Thank you for being here. Everybody that's in the session so far, I'll keep my eye on it. And if you've got a question or a comment, pop it in there. If you're part of the VantagePoint family and you've got the software, let me know that as well. Even if you don't, let me know that. I love interaction and communication, and I try to keep my eye on the messages as quickly as I can. All right, so right now what you can see is the Dow, and from a Dow standpoint, we've got some major consolidation coming into play. Nothing that is real drastic or market moving, as I like to say, but you can see from the indicators, we've got some consolidation in the Dow. And when I say consolidation, what I mean is that there was a bearish trend that was identified early last week in the Dow with the artificial intelligence. And I want to walk everybody through what I'm talking about here, just so if you've never seen this before, you know what I'm looking at. On the screen right now, I have predictive indicators, patented predictive indicators. And the first thing I always look at is this crossover, this blue line right here. This blue line is a predicted moving average. We call it a PMA. And what the PMA does is it takes a simple moving average and it enhances it with the artificial intelligence information so that it can predict the trend, right? How it can predict the trend. Hey Gotham, I see your note about how to start AI option trading journey. Well, I don't know if you've got the VantagePoint software or not, but if you do, then certainly we can help you using AI to enhance your options trading. Now, if you don't know how to trade options, of course you want to get that education first, because what we provide for you are the indicators and the software to enhance it. And when you look at the screen, I'll walk through all those indicators. So if you've got questions as we go through it today, certainly ask away. So what I'm looking for is this blue line's relationship to the gray line, because when the blue line crosses below the gray line, that is the artificial intelligence in the software saying this trend is expected to start going down. If I put my cursor on that day, you can see that was 9.4. That was last week. That's when VantagePoint said the Dow had found a top and we can expect a pullback in the Dow and a reversal from an overall trend standpoint. This is a trend predictor that I'm looking at here. And it predicts 1 to 3 days in advance of the trend. Not up days or down days, but the overall trend. This here is a strength predictor, and it's indicating bearishness from a strength standpoint as well. I'm writing on the screen just to make some quick notes. So if my trend is expected to be bearish and my strength is expected to be bearish as of 9.4, hey Renee, as of 9.4, then that tells us that there is bearishness expected in the Dow. Now I can look down here and see I've got 3 predictive momentum indicators where these lines are pointed down going into that day as well, saying the 1, 2, and 3 day predicted momentum. And what that means is the AI is predicting the direction that the momentum could push this over the next 1 to 3 days. So if I've got momentum saying bearishness as of 9.4, I've got strength saying bearishness as of 9.4, and trend saying bearishness as of 9.4, then it's safe to say the artificial intelligence, the AI sentiment is indicating bearishness on the Dow as of 9.4. That would have been very valuable for a lot of traders. If you didn't have VantagePoint, I'm sorry you didn't have that heads up, but you can see in the VantagePoint software it was very clear right there on the screen. That's the Dow, right? That's the Dow. You can see what happened from a Dow trend standpoint. And VantagePoint even indicated the Dow today could go as low as 40,510. All right, 40,510. Now it's not there; it's at 40,006, but that's trading right within the range that was expected from a forecast standpoint. Because this little gray bar out here is a predicted high and low trading range for the next trade day. And I get it in the VantagePoint software every single day, day in and day out, so that I know where to set those goalposts, if you will, those guide points. Right now, the Dow has a high of 40,989 and a low of 40,602. VantagePoint said you could see a high as 41,228 and a low at 40,510. So it's trading exactly within that range. As a matter of fact, if I color it in where it's trading right now, again, that's a 49.21. So it's like trading like here, right? That's where it's been trading today. Exactly where VantagePoint forecasted it could trade at 6:30 at 6:30 p.m. last night. The forecast that I'm using here come out at 6:30 p.m. Eastern time every night. And yes, if you've just joined, we are going to dig into options today. But I just want to create a good foundation, a good base for everybody to understand what I'm looking at and what assessments I'm making based off of that information. Here is the S&P 500. I got 3 months of the S&P 500 up on the screen, and the reason I'm showing you this is so that you can see what the artificial intelligence is expecting for the S&P today. Today is Tuesday, September 10th again. So if you've just joined, thank you for joining, by the way. Welcome. Hello, Leon. I see you're in the room. Good morning to you as well. If you've just joined, let me know in the chat that you're in. Hey, Brenda, glad you made it. Glad you're here. All right, so S&P 500. What we see is that VantagePoint indicated very clearly back on 9.3, a day earlier than the Dow, that there was some major bearishness in the S&P 500. Matter of fact, we had some VantagePoint users write into us and say, hey, that really saved me a boatload for a couple of reasons. Number one, it went lower than was expected, and I was able to get stopped out and go to cash, and wasn't worried about getting back in. I was able to reserve and preserve my capital through this downtrend. And getting messages like that is it's nice to see and hear, because this powerful information is available every night at 6:30 p.m. Eastern time, and you can see it has been spot on at forecasting these trend reversals and really maximizing these big swing trades, if you will, in the S&P 500. What is VantagePoint saying about the S&P 500? Now you can see its overall bearishness with a predicted high and a predicted low expected to be here. When I put my cursor on that day, it's saying a predicted high of 523. By the way, where I'm looking, you can follow my eyes over here. I'm looking right over here. There's the predicted high, there is the predicted low, there is a predicted midpoint, and here is the predicted trading range. All for me right there. I got that at 6:30 p.m. Eastern time last night on the ES. Right now the ES is, let's see, 54.80. Right? there. Right dead center of where VantagePoint indicated it could trade, and the high today, 55.01. VantagePoint forecast at a 55.23 potential. The day's not over, but it's trading right within that predicted candle. Now you'll notice that where the market opened and where it is now is bearish, right? Well, VantagePoint has been indicating for well over a week now that there's bearishness, and I know that because that blue line is below that gray line and that shaded area is red. So the forecast in the artificial intelligence is very clearly saying that there is bearishness expected to happen here. The neural index is indicating bearishness as well, right? And then my momentum indicators have lower highs, but they are trying to turn. They're trying to turn bullish. They haven't turned bullish yet. Even the short-term 1 day has lower highs. You know, if I just draw a line connecting those highs, you can see all those lines are pointing down, some stronger than others. But there is certainly more bearishness expected on the S&P 500 based on what the artificial intelligence is saying. And so far as 11:42 a.m. Eastern time, from where the market opened to where it is now, we are certainly getting that bearishness. Is it up from where it was yesterday? Yeah, absolutely. And you can see VantagePoint indicates that could be the case. There is some of that predicted candle above yesterday's close. So nothing that is happening in the markets today is unexpected based on what the artificial intelligence in the VantagePoint software is telling me. Does everybody see that? As you look at my charts, whether you have the software or not, as you look at my charts and you can see that these predictive indicators are indicating bearishness here, is it making sense how I'm doing the analysis? Because this is purely education. I'm not providing trading advice, and I want to make sure that you're coming down the path and you can see what I'm looking at. It's simple, extremely effective, and extremely valuable. Here's the NASDAQ. From a NASDAQ standpoint, you can see that VantagePoint was expecting the NASDAQ to be a little bit stronger today than the other two, the strongest of the three, even though the downtrend is still in effect. Look, VantagePoint forecasted the downtrend in the NASDAQ right there. It's 828. That was last month, folks. Last month, VantagePoint said, okay, the NASDAQ has found a little bit of a top and is expected to reverse over the next 1 to 3 days. Day 1, day 2, day 3, spot on, right? The artificial intelligence said that trend's expected to reverse. We got that reversal, and then it just kept going. And yesterday, obviously, the bulls are buying into it, saying, hey, whoa, wait a second. We don't want it to go that much lower, but it's still expected to have a little bit of bearishness in that trend. It's not going to fall off a cliff. It even has a strong day expected for today, but all in all, the trend is still on the weaker side of things. And that's valuable information as an options trader to know that there's still overall bearishness in the Dow, the S&P, and the NASDAQ. The NASDAQ is the strongest of the three. That can provide some very, very valuable information when it comes to buying and selling options. And by the way, from an options trading standpoint, options traders love the information found in VantagePoint because of the things that you can do with it from a premium saving standpoint, from a strike price setting standpoint, and from a money management standpoint. You want to talk about legging into positions, layering into positions, taking money off the table. The artificial intelligence is very valuable at doing that. So there you go, Kay. Thank you for the question. Is it much different than a moving average? Thank you for asking that question, because although it looks like a moving average and it acts like a moving average, it is very different than a regular simple moving average or exponential moving average. Let me answer Kay's question right now just with my pen here. How about I do that? A moving average calculation, and I'm just going to draw a simple moving average calculation basically on the screen. If you have a 10-day simple moving average, you add up 10 days, 3, 4, 5, 6, 7, 8, 9, 10 days. You divide by 10 and you plot that on the chart. All 10 days are historical information, okay? That's a simple moving average calculation. If you want to turn that into an exponential moving average calculation, all you simply do is you put a little bit more weight, there's a plus sign, on the more recent days, trying to front weight or more recent weight that calculation. Simple moving average, exponential moving average draws a line on the chart, and you can use a crossover system. But just remember that in this calculation, 100% of the information is lagging. It's past price data. So the question is, how different? Let me explain. The pattern that we have here at VantagePoint for a predicted moving average, all right, takes those 10 days, but instead of having 10 historical days, you can imagine taking let's go 8. 1, 2, 3, 4, 5, 6, 7, 8 days. I'm going to draw a line for today right here. And then what the AI does is it predicts 2 completely forecasted days unknown to anybody else in the world. And then it adds that to the formula, divides by 10, and then plots it on the chart. So what it's doing is it's adding predictive data to the formula. And as a matter of fact, it can add up to 3 days of predictive data to the formula to transform a lagging or trend following indicator to a trend forecasting indicator. So when that blue line has a lower value than a simple moving average, that means that simple moving average is expected to keep coming down because of that predictive days data, which means a trend is expected to keep coming down. All right. Great question, Kay. Thank you for asking. Matter of fact, I'm going to pop a little 100 in there because that's the kind of information, if you've got in your mind wondering what the difference is, I'd love to explain it to you. So what we've done now is we've used predictive indicators to help us understand what's expected to happen. In case you're wondering, this is a predicted moving average. It has up to 3 days in the calculation. This is a 2-day predicted of strength, doing this similar calculation. These are momentum indicators that are looking at those calculations and figuring out the momentum over the next 1, 2, and 3 days. So those are all predictive. And that same type of formula and pattern applies to the predicted high and the predicted low that is predicting 1 day of price action. All right. So the idea here is that when these predictive indicators agree, you've got what I call AI sentiment, whether bullish or bearish, and then you can use that information. Now, what we saw from the predicted high, predicted low is that we can expect some short-term strength today, right? You can see the predicted high and predicted low in all 3. Here is the Dow, green, which means we're expecting a little bit of strength today, even though the overall trend is down. The neural index on the Dow, you can see, has got a little bit of strength in it as well because it's green, right? So there's consolidation happening, as I said when we started, overall bearish trend with some consolidation happening. That means today's movements, if we're looking for short-term trades from an option standpoint, there's probably some really great call opportunities out there, selling put opportunities, or depending on the sector, there could be some really strong bearish opportunities. We're going to look at all of that stuff today. And the first thing that I want to look at for you guys is Ford Motor Company from an optionable standpoint. And thank you, Kay. Kay says, interesting concept. Thanks for the explanation. The great news is it's not a concept. We've been utilizing this technology and these calculations since 1991. It's been available for traders like you. So it's gone from concept and idea to complete application, and it's been working in the markets for 33 years, just as I explained it. And that's one of the great things about this software is that it's not new. It's these indicators. This isn't an idea, right? We didn't slap AI on it because everybody's talking about AI. As a matter of fact, our founder was on TV, CNN, talking about using artificial intelligence in the markets in 1994. I have the video clip. It's remarkable. Great comments. So thank you so much. Thomas, sorry, just joined as VantagePoint work. Yeah, there's small cap stocks. You know, when you talk about cap, it all depends from an artificial intelligence standpoint does it have enough AI or enough history for the AI to forecast it, right? Ford obviously does, but I don't know if you're talking about share price. You said cap, a little bit different, but still, it does work in a lot of different markets. What VantagePoint does, what we do here is we train the artificial intelligence, and then we do out of sample data tests to make sure our accuracy on forecasting is at a minimum at 70%, and we can get all the way up to 87.4% accuracy. If we can forecast the trend with that degree of accuracy, then we'll include it in the software, which means at 87%, you're right, 87 out of 100 days where that asset is expected to go directionally. Think about that. Imagine if you don't have the VantagePoint software, do you think you could benefit from being right, call it 80 out of 100 days? It's a question I always like to ask. Yes, WNS predicting 1 to 3 days depending on the indicator that you're looking at. So you said 2 or 3 days. It can go from 1 to 3 days. So a range. What variables, Nicholas wants to know what variables other than the history of the individual stock does the modeling use? Oh, well, let me show you. Great question, by the way. We also patent the process called intermarket analysis. The variables, for instance, if I bring up Ford Motor Company, and I'm going to go into the market details here, and I'm going to go to the intermarkets. Here are the variables. What VantagePoint is doing, and I didn't plan on doing this all day, but I want to answer your question. This is valuable. We're going to get into options, don't worry. But Nicholas, to answer your question, VantagePoint is scanning over 10,000 markets around the world. Millions and millions of data points related to the open, high, the low, the close, the volume, the open interest of so many markets around the world. Then it's figuring out from Ford Motor Company, when the price of Ford moves, what drove it? And in this, that was punny, right? What drove it? But it really, sorry, I got dad jokes. I'm a dad, so they come out once in a while. What the AI has figured out is L'Oreal, Johnson Controls, of course, General Motors. They have an impact on Ford Motor Company's share price. The AI has figured out that Piedmont Lithium, Magna International, Bloom Energy Corporation, as well as, look, light sweet crude oil, or world currencies like the Japanese yen. I always call that one out, the euro, right? You can see natural gas, the S&P 500, JP Morgan ETF, equity premium income ETF. These markets, there's 31 markets here that have been found to drive, influence, and impact Ford Motor Company. So to answer your question, I believe it was Nicholas, this is what the AI is analyzing to then create that predictive information to then enhance those predictive indicators. All right. It's a dual patented software. One patent is on the intermarket analysis, because once it does all of this calculating, then it figures out whether it's going to push Ford up, sideways, or down, because those are the three market directions, right? And then each one of these intermarkets, we call them, is weighted by degree of impact. For instance, General Motors may have a much larger impact than Johnson Controls. The AI has figured all of that out by analyzing millions and millions, by now billions of data points to get to that information, right? Yes, David, it does forecast for cannabis. There's over 1,200 individual stock forecast QV, different symbols that are forecasted using this technology, as well as 72 different futures markets, 35 Forex pairs, 46 cryptocurrency and cryptocurrency pairs, 1,000 Canadian stocks, 150 ETFs, forecasted all in the VantagePoint software. So hopefully that answers your question. Wow, great questions. Let's get back to the forecast. That's what I want to dig into, but I do want to answer the questions. So thank you very much for being involved. All right, so here's Ford Motor. Let's talk about options trading specifically. All right, let's talk about options trading specifically and how options traders love using the software. First of all, this is a crossover in Ford Motor Company. You can see it here, or maybe you want to use this one. I don't care which one we use. We can dig into the details. If we're thinking about buying calls, this was a crossover on this day right here, where VantagePoint indicated on 8/14 that there is a bullish opportunity in Ford, right? There's another bullish opportunity that was highlighted in Ford right here on 6/25. So we got two bullish trends in the last 3 months that were forecasted very well in Ford. And then before earnings, a bearish trend, right? So no matter what, a lot of opportunity within the software to do very, very well. The first thing that I'm going to do is highlight this crossover right here. On this day, we got bullishness from the crossover, from the Neural Index, and we were getting higher lows in the momentum indicators. So those predictive indicators we talked about a second ago, the AI sentiment was certainly bullish. Well, on that day, the closing price was $12.09, right? At $12.09, I'm looking for an opportunity to buy 10 calls on Ford on that day on 6/25. Well, if I like to buy at the money with a delta around 50 or 60, I can certainly buy around $12.10 or $12, depending on the different strike prices available. So I can set my expiration out. I'm always looking to do a 30 to 60 day expiration, which means I'm looking for the July or August expiration. This was June 25th. So the July expiration, 30 days out, roughly, right, using that calculation, would give me a pretty strong indication that this trend is expected to move. Now, people ask me all the time, why do I set my expirations out there? July would have been the 19th. So the 19th would have been the expiration date. I just cross-check that, right? So let me draw my line here. This is the crossover point. Very clearly see it. This is the expiration date according to the options chain. If I'm buying a 30-day expiration at that point, I could buy to that date. If I buy a 60-day expiration, I could buy it further. Either way, I don't intend, and this is the time decay hack, folks. This is what I was talking about in the write-up. I don't intend on holding to expiration. Does anybody know why? Go to the chat real quick. I'm going to grab a drink of water, but does anybody know why if I'm buying a 30-day expiration that I don't intend on holding to expiration? What's your strategy, or what's my strategy in that case? Sorry about that. Doing a lot of talking. And we are live, so. By the way, while you're answering that question, if anybody has any other detailed questions you want to dig into, you can always go to VantagePointForecasts.com. VantagePointForecasts.com, and we can answer your questions individually, or somebody on our team here can reach out and answer any questions you have. But the answer to the question is to beat time decay. Thank you, Peter. I know it takes a little bit longer for the answers to come through some time because there's a little bit of delay. Time decay is the answer, and the reason behind it is I want to beat time decay because the closer that I get to expiration, the more time decay affects the value of that option if it doesn't go in my favor or it even goes sideways. So I want to beat the odds with time decay. Now, if it's going in my favor and I don't have any real bearishness expected, then I could go right up to expiration. It gives me the ability to make that choice using the artificial intelligence in VantagePoint. So we got our crossover, we got all the indications we need. Get strike price, we set around 1209, and don't worry, I'll show you how to use that predicted high and predicted low to set a more effective strike price here in a second. First, I want to talk through the trend. As long as that blue line stays above the black line and the direction of that blue line is continued to point up, meaning it doesn't flatten out. Flattening out is a money management alert, right? If the slope of that line is positive, I don't know how I can say it any different ways, but if that line is still every single day has an up slope to it, a positive slope to it, then I can simply ride that right up to expiration, right? Everybody can see that. And in that case, that would have been a very, very valuable move. I mean, heck, from that point to the date of expiration, what do we have? 20.97%. Now, hypothetical gains, $2,500 minus premium, right? So let's call it a $2,000 gain right there in just 16 days. This is a simulated trade, but you can see exactly how to apply this technology, and that's really the key. The predictive indicators gave me the indication this trend was expected to start moving higher, and then throughout the trend, the predicted trend indicator identified that there's still bullishness expected, and I don't have to worry too much about time decay. Now, I can tell you that's not always the case. For instance, this bullish trend over here. The blue line crossed above, the neural index was green, everything. We had higher lows going into that day. All our predictive indicators were telling us bullishness. And then notice by the way, let me mark the date here. This was 8/14. So the expiration that you're buying there is a September monthly expiration. Of course, you can buy the weekly, but September 20th. So let's find September 20th. I'm going to drop a line on the day the crossover happened. And if I bought a 30-day or I did 1 month call to September 20th, I could go, well, we're not there yet, right? 9/10. So we have some time. So in that case, what we're looking at here is a bullish crossover. The blue line stays up all the way through. Using what I just talked about, I get a flattening of the blue line right here. Bye. Out. See ya. Gone. Why? Question is, I don't want all of this price action and time decay combined to rob me of the value of that option. So as soon as I see a flattening, I can take that option off the table or part of it. Right? When I see that happen, I know that time decay ramping up and trend slowing down is going to impact the value of that option. That's the number one single best way to have an impact on time decay, right? The underlying asset moved 7% just right there in 9 trading days, 7%. Well, from an option standpoint, that's 25% gain, and then I don't have to worry about that option losing value. As a matter of fact, if I take that off the table when I use the strategy that I just walked you through, buying a September expiration, but selling that option when price action tends to slow down, even though I'm not anywhere near expiration, will help me hold on to as much of my gains as possible and lose as little as possible using this strategy. Now, let's forward to this latest crossover. We got a cross to the downside right here on 9.4. We can see it very clearly. 9.4 VantagePoint indicated that this trend is expected to go lower, okay? I don't have to think about it too much. I can see very clearly the blue line is below, the neural index was red, and the predictive differences were pointed down. Here's what I mean. Down, down, and down. That's a shift. So I got out of this opportunity here, and then I could be on the lookout if forward is something that has been trending very well, and it has been. I can go both ways by buying some puts. So in this case, I can buy the strike at $11. I can buy the strike at $7.50, depending on what's available for me at the moment. As the market opens the next day, you can see I certainly get my fill. And then at that point, very quickly, it goes straight down, even including yesterday. That's down 3.5% on that trend alone. And today, oh wow, let me pull it forward here. Right now, folks, take a look at Ford, $10.24, right? So Ford is down below where VantagePoint predicted it to go. VantagePoint said it was expected to be bearish. It could go down to here. It's down here. The neural index is red. Momentum is still bearish. So this is a very, very valuable move. And I don't have, my blue line is still moving down. So that means I don't have to worry about striking early or getting out of that position because that opportunity was presented on 9/4. I've got until October 18th for the monthly expiration to make a decision on holding that. Very easily, very quickly, using that information provides you a lot of, using this predictive information provides you a lot of information on decision making, right? Let me see. Somebody says we lost sound for a second. Did we lose sound? Okay. We still have sound. Might just be you, WNS. Might just be you. Okay. Yep. There you go. So that's I was just reading the notes here. Sorry about that. She said, so you should have bought puts on the cross and could have made it all in one day. That's crossover to crossover is a really great strategy. You're exactly right. And that one move right there, just in one day, produces a substantial move. But I don't have to worry about one unless I have a target. If you got a 25 or 30 or 40 or 50% target on your options and you hit your target in one day, great. Take your target and go, right? That's one of the things that makes options trading so fun is you have a lot of ways to execute that position, and with the leverage and with money management, you could really put yourself in a really good spot. All right, good. I think we all see it now. One of the bonuses I said in the chat was I was going to show you how to run a scan using this information, because one of the questions I always get is, how can I find these opportunities and let the software find it for me? So if you're VantagePoint family member, by the way, we call our users VantagePoint family members because of the trust and respect they've put into us and we put into them, and we want them to be as successful as possible. So if you hear me say that, that's all I'm talking about. So if I bring up IntelliScan up here in the top left corner, this is the IntelliScan feature in the software, and if I'm looking for a bullish opportunity, I can open IntelliScan and say, go find some uptrends, right? That easy. You want to go along with the market, of course. We did expect some bullishness in the market today with that consolidation. So you can see in my portfolio, I've got over 1,729 things scanned. Of those 1,729, 101 have a new fresh opportunity, a fresh crossover, right? Thank you, Etiquette. Yes, the momentum predictions are down here at the bottom. You may have missed me talking through the momentum, but this is a 1, 2, and 3-day momentum prediction down here at the bottom, these three lines, okay? we also go a little bit further, and we have predicted MACD, predicted stochastics, predicted RSI, all within the software as some add-ons. So if you got information, you got questions, you want to dig into it, go to VantagePointForecast.com, and we can talk with you more in detail about that. All right. What if advanced indicators contradict everything else? Great question. We'll talk about that here in a second. It's something called AI sentiment. We have an AI sentiment index that we use to weed out those contradictions. All right. All right. First things first. What am I scanning for? Here's a crossover. Right. This is the crossover, and it's telling me the predicted trend direction. And you can see I've got it set to up. Okay. Here's the neural index. The neural index is telling me predicted strength. I've got it set to up, right? Short-term difference, 1 day predicted momentum. That's this line at the bottom. The medium term, 2-day predicted momentum. You can see the little tag. That's this line at the bottom, the hot pink one. Long-term predictive difference, 3-day predicted momentum. That is the navy blue line at the bottom. So basically what I've done is taken my AI sentiments, the 4 points of confirmation, and put them right into a scan, and then I filtered it to say, go find things where there is bullishness across the board, including the predicted high and predicted low. So now I don't have to go through 1,700 individual charts. I can go through whatever, and if I wanted to go through 100, I could, but I'm just going to look at the top. I've got this sorted by the things that just crossed over at 6:30 p.m. last night, 1 day, right? There you go. So it scanned it like that. I don't know if you guys saw it. Maybe I should back up. But if I close my IntelliScan, I'm not going to save anything. I'm just going to go to IntelliScan, and I'm going to open IntelliScan. I want to go look for an uptrend. And we can count it. 3, 4, 5, 6, 7 seconds. 7 seconds to scan 1,700 opportunities and present me with 101 that might hit my hit list. So I'm just going to start at the top. At 6:30 last night, VantagePoint said RPM, a basic materials stock, had a bullish expectation here. So let's zoom in on this bullish expectation. All right, here we go. There it is. The blue line crossed above. Check. Neural index green. Check. Predicted differences all pointed up. Check. I've got everything I need across the board on RPM. I zoomed in on it so everybody can see it very clearly. We got our crossover. We got what we need. We got a predicted high that's expected to be higher than the previous day's high. We got a predicted low that's expected to be higher than the previous day's low. Good. I've got what I need to make some decisions. Now I even have the predicted trading range. If I put my cursor on this predicted candle, and I'm zoomed in so that everybody can see it, the low is 115.70, the predicted high is 118.37, a midpoint of 117. So I'd be looking for a strike price between 115 and 118. If I buy a strike price that's outside of 118, it's out of the money, I am burning cash. Yeah, I'm going to save on premium, but at what risk, right? So I'd be looking for a strike price that is less than 118 and in that 115 range. Why? If I go deeper than 115, I am also burning cash because I'm paying a lot more premium than is absolutely necessary compared to what the artificial intelligence is telling me. Right? That's how I use that predicted candle to maximize my premium decision-making, decisions. You get my point, right? If I buy too far out of the money, the likelihood it gets up there goes way down. Yeah, the premium is going to be lower, but too much risk for me to lower that premium. If I buy too deep in the money, then I'm paying too much money than is necessary according to the predicted high and low. Well, 115 is a strike. RPM has a 120 strike, has a 115 strike. I got a 115 predicted low, 115.70, so I'm good buying the 115 strike. And, from a bid-ask standpoint, 115 at $6.50, that puts me in a really, really great position, right? If you think about that, trading, $2,000 lots at a time, you could easily get 2 or 3 contracts. So controlling 300 shares or so with 3 contracts with a strike of 115 and an expiration 30 to 60 days in the future. Let me draw it out for you guys, right? 3 calls, 115 strike, expiration October 18th. Could be an expiration that I choose going out 30 to 60 days, right? Now what I've got to do is make sure when that trend makes its move, right, that I get the fill the next day. I can go in and put in my order and make sure everything is set. So I'm looking for that opportunity. When the market opens, I can see that there's bullishness. I can take that midpoint, and as long as I get an open around that midpoint of that predicted candle, that 117, I can certainly jump on. A VantagePoint predicted a midpoint of 117.04. I get a 117 open. It's guns blazing today with this option, and you can see this is exactly the strategy that can be used for 3 call contracts on that. Now, if you walk through that, this is a simulated example of where you can see if you walk through that, that option specifically is up 71% today alone. It's a 71% gain using that strategy that I just walked through on today's trade on RPM International. Walking through that, right? VantagePoint is still indicating bullishness on RPM. You can see that on the screen. And you can see that that strike is deeper in the money, so you're getting a delta of 60, 65. You can see that right there on the screen. And if you hopped over to your options contract, you could see that the IV is on the lower side of things. And you can see that that is a great buying condition. So, by the way, the strategy that I'm looking for from an options trading is a delta no less than 50, by the way. WNS was asking about that. It's a 50 or 60. 60 ideal, 50 okay, right in that range. So hopefully that answers your question. There's 1. I said 3. Next one on the list, Donner. We're going to do the same exact thing. The process is the same. I'll zoom in on it as well just to show you that we got a crossover. Bullishness on ticker DHR projected from VantagePoint last night at 6:30. We're going to walk through that strategy again. Last night was 9.9. Forecasted for 10.10, and you can see if I put my cursor on this, there is a forecast for 10.10, and bullishness, bullishness, bullish. My AI sentiment across the board was bullish, right? Well, if I wanted to add on some of those additional indicators, I can certainly add on some of those additional indicators, and let's go down to our technical indicators. Somebody was asking about these before. Predicted RSI, predicted MACD. What else do we have? Predicted percent R. I can add those indicators right into the chart, and these are enhanced with the same exact process I was talking about before. You can see my predicted MACD has a cross to the upside, fresh, brand new. My RSI is in that perfect RSI scenario where it's gaining some bullish momentum strength up to that 60. That is ideal, folks. And percent R also has a lot of bullishness. So no matter what, DHNR with my add-on indicators as well as my 4 points of confirmation are giving me a very bullish indication. Now, we're buying the October 18th expiration. We know that. But what strike price are we buying? We got a 270, midpoint 273.63. That's our midpoint for this. We got a high. Look in the top left corner, folks. 275.60 down to a 271.66. So I got about a $4 range that I can go look for an opportunity with the October 18th. Let's see, the 270 gets me a $10, excuse me, a $9.90 bid. Ask a $10.50. Let's see what else. Last price on the 280 is $4.80. 280 is way out of the range. So the 270 is right along that sweet spot. That's the closest I can get to that predicted range. If I'm comfortable taking that bet, I can. And at that point, excuse me, $10 per share. That's 2 contracts I get at $2,000, right? 2 contracts to the bullish side with a strike price of 270 and an October 18th expiration. So again, 2 calls, 270 strike, and a October 18th expiration. That is what I'm looking for this trend to work out. All I need now to be sure that that is the right maneuver for me is an open somewhere in there. Now, if I get an open somewhere within that midpoint was a 273. If I get an open at that 273, then that's a potential opportunity for me to go long, trading that opportunity to the upside. And I've got till October 18th for that to work out. That's exactly the kind of setup we're looking for. Until I get a cross or a flattening of that blue line, we got a great opportunity there. Is it profitable at this point? Right now, as we look at the charts, not too much, a couple percentage, but nothing too crazy, nothing too worrisome, but not exactly what I'm looking for from a major gain standpoint, right? With accuracy up to 87.4%, understand nothing is perfect, but we've got till October 18th for that to work out. And these are pretty remarkable forecasts. Here's another one, TMO, 5 below. I've got several, Ambev, Domino's Pizza. Got some non-cyclical ones, and we know with the current economy, non-cyclical can do very well. Ooh, look at Domino's Pizza, folks. Look at this. I think we found a 52-week low. I don't know. Let me double check. I can put in my 52-week look back indicator on here. We don't have a 52-week low, but we've got a pretty good support point. I'm going to put on my verified support and resistance because I'm seeing something I like. We are bouncing off of a support point. I am really seeing something I like here. We have some room to resistance. By the way, if you don't have this, if you've never seen this before, then understandable. What we're looking at is verified support and resistance zones added in with a 52-week look back. These are additional indicators that I like to use, but when I looked at Domino's, I thought this could be something something to dig into. Something I like, right? Well, when we look at this, I'm going to take off my 52-week look back. I'm going to zoom in on this a little bit. I've got a new trend forecasted right here. Let me zoom in on this. A new trend, a fresh crossover. Neural index is green. Predictive differences are all pointed up. Wow, I'm liking this one a lot. Predicted high, nice. Predicted low, nice. Good opportunity as long as I can get an open somewhere in that midpoint of that candle. I'm looking for a 419 open on somewhere around there on Domino's for this to be really ideal. The open on Domino's was 420, so right within that, kind of close. That's really a personal decision. If your 420 is close enough to 419.73, it's 23 cents, 27 cents. Probably close enough, if you ask me. But that's up to you. That's up to your trade plan, right? So we've got a good opportunity in Domino's shaping up. We got room to resistance, and as long as I've got some bullish, remember we're talking an October 18th strike. Let me pull up, pull up the options chain real quick and see what we got. Looking for a strike between 425 and 414, and we've got one at 420. 420 is a $21, so that's a one contract opportunity here using the same $2,000 risk. By the way, if you don't know exactly how much money you're willing to risk into every trade and lose 100% of, you got to figure that out. We're talking about 2%. If you ask me, talking about 2% overall account size. And in this case, that's one contract controlling 100 shares of Domino's, and we've got a great setup with room for this to go up to 430. Another great opportunity potentially here in Domino's. And guys, this came right out of the scan. You can see a 5 below. We got several. Ambev. There's several opportunities in this scan, and this is a fresh scan that I just ran live. Using that option strategy we just walked through, that puts you in a really great scenario. Yeah, so just looking at the chat, WNS, for me, this is personal. I'm not providing trading advice, but for the way I like to look at options chains, I do like a 60 better when I'm buying options. I'm looking for low implied volatility with a 60 delta, 50 or 60 delta, right? Depending on, you're asking about 60 days to 30 days. You keep asking about what's better and what should I pick. I'm not providing trading advice, but my strategy says if I'm expecting to hold that trend for anywhere from a few days to a few weeks, then 30 is better for me, but 60, depending on what's going on from a market conditions, gives enough time for that trend to mature. I can always sell it in 3 days, right? So 30 to 60 days, depending on where we are in the month. If I'm at the end of this month, well, then I'm looking into, probably more like a 40, 45-day expiration. How do I use a TSI trigger? TSI is a really, really powerful indicator. when you're looking for things that are moving through support or resistance, right? Predicted TSI is a strength indicator that is a predictive indicator that can help you understand when something is expected to bounce and move through a resistance or a support level. If I put support and resistance, for instance, on Ford, let me go TSI, predicted TSI, just to answer a question in here. Predicted true strength. There it is. Bang. Here's a great example. I'm also going to put on verified support and resistance just to make this point and answer this question. This will probably be the last question I answer because I'm running out of time. By the way, if you got a ticker you want me to look at, pop it into the chat. I could probably do 2 or 3 tickers as well, just to do some quick analysis for you guys. But if I put on my verified support and resistance on this, and this is really for the VantagePoint family members because these are add-ons. If you've got the software, I can see very clearly, and I'm going to zoom in for you guys, just to the end of Ford here. Here we go. I can see that price on Ford broke through. Here's a support point. It broke through and stayed below support. Here's a break, and here's the second day below support. I've got 2 days below support right here. I can look at TSI to say, okay, when TSI crosses and this is below support, which is turning into new resistance, I got to go. Well, last night at 6:30 last night, I got a clear cross on TSI with price staying below support saying, expect this thing to rocket to the downside because TSI, the true strength indicator that's predicted with VantagePoint, said prices are below an old support, which are now acting as resistance. It's about to dive. And that's the most powerful way to use a predicted TSI in VantagePoint, right? TP, adding the Larry Williams indicators in the VantagePoint software is something that we can help you do. Reach out to your VantagePoint University coach because that is available in the software for VantagePoint family members. You have to master the basic indicators, but I don't know which chart you want me to add them onto, so maybe help me with that. P-check, if the price is above the midpoint and you hope the price will move back later in the day, how can you figure what price to enter to get the option at that midpoint? I'm looking at the open, P-check. So you can try to massage an entry. That's not my style. I'm looking at the open. Even if prices fall, if that open is above that midpoint too high, then I didn't get filled. I didn't take that opportunity, and that's okay for that day. I move on tomorrow for another trend, or I look at another stock that you always got 3 or 4 stocks, in my opinion. If you got some dry powder and you're looking to get into position, you've probably got 3 or 4 stocks by the time the market opens that you're looking for specific opens on. If you get an open that's way above the midpoint, fine, move on, right? Move on. All right, so let's see, INSG. Let's take a look at INSG. That's the first ticker I see in here. INSG. Burke and Seago's has had a fabulous trend. It's a very low traded stock, right? It's got about 200 to 300 shares traded on a daily basis, so it's something you got to think about. But VantagePoint forecasts it very accurately. As a matter of fact, the ticker on this one has been trending quite well. You can see it's up over 50%. VantagePoint is indicating that there is still more bullishness left in this trend. Matter of fact, it says that the midpoint for today is 1573 with a predicted high of 1632 and a predicted low of 1515. Let me go see what Inseego is doing. Opened at 1556, a high of 1579 and a low of 1510. So it's doing exactly what VantagePoint indicated and saying that there's still some bullishness left in this trend. So thank you for asking about that one. Hopefully that's helpful. Alphium, let's look at Alphium with this. ALPHIUM. Alphium is not forecasted with VantagePoint NOT. Remember, it has to be able, VantagePoint, the artificial intelligence, has to be able to read the intermarket to figure out what's driving and influencing that stock, and then get an accurate forecast at a minimum of 70%. That stock doesn't look to be in there, or that ticker doesn't look to be in the VantagePoint software, which means you got to ask yourself, if the power of AI cannot forecast for it, should you trust your hard-earned income in trading it? I don't know. That's a question you could ask for yourself, but that's a question that I always like to ponder, right? LHX Carmine, let's look. LHX, I'm just going down the list. based on what I'm seeing in the chat box. Probably got 2 or 3 more we can do. So VantagePoint forecasted a couple of days ago that there's bearishness expected in LHX. VantagePoint said 9.6, that there's a pullback off of this latest uptrend going on, and that pullback today could go as low as 225.72. That's pretty low. We got a little, the bulls tried to push it back up yesterday, but all in all, you can see VantagePoint's forecasting a bearish trend with a lower low expected today. Strength is bearish, and all the momentum indicators are creating lower highs, all bearish. So we're getting an AI sentiment bearish across the board. Expecting L3 Harris to be down today, based on what we saw last night using this predictive information. Let me see what else we got in here. LHX, EMC2, Sunrun. You like a lot of these lower priced opportunities, these lower cap stocks. I see the tickers you're putting in here. Here's Sunrun. We do have that one forecasted with the artificial intelligence, forecasted down on 9:30. Bearishness expected. The blue line stayed below the black line, the neural index red, all the momentum indicators. Look, 6:30 last night. This is what you're looking at. As a matter of fact, I can zoom in on it just to make it easy for you, so you can say, what would I have seen last night when I downloaded my predictive data in the artificial intelligence? Blue line is below, the shaded area is red, that's downtrend. Neural index, red, downtrend. Predictive differences, creating lower highs, downtrend, down momentum predicted, a predicted lower high, a predicted lower low. So the AI sentiment on Sunrun was all bearish going into the forecast for today. So when this market opened, we expected it to go down. Inocheat, I think that's pretty helpful for you. WNS wants to look at CL. Last one, folks. Light sweet crude oil. Right? Light sweet crude oil. All right. Amika, you scan for the biggest movers of the day and see they actually moved according to what was predicted. Well, the biggest movers of the day compared to VantagePoint, what biggest movers are you talking about? Because I use VantagePoint first. I don't go look at anything else and then compare it to VantagePoint. I always go from VantagePoint first, and then I do any fundamental analysis. Here's light sweet crude oil. You were talking about Larry Williams EMAI and PSI, which is available in the VantagePoint software. So I can pop those on the screen. Let me just spell it right. All right, professional sentiment. There we go. We can see that the professional sentiment on this, on light sweet crude oil. And if you're looking at this, look, the one-day prediction on light sweet crude oil has light sweet crude going into a channel, but it's got a predicted low of 67.46. Think about that. It's got a predicted low of 67.46, and this downtrend is all on, saying bearish. Larry Williams has rolled over. Larry Williams' professional sentiment is going below that. You can see it. It went above, across below, saying that there's bearish from a professional sentiment standpoint. Electronic market, let's see. EMAI, another one that I'll throw on here for you. EMAI has created lower highs and has rolled over as well, so there's distribution happening there. So safe to say, we've got bearishness expected on light sweet crude oil, even going in today. And we knew that going into today, there is bearishness on here. Very clear. I've got the one-day prediction on. We can look at the two-day prediction. We can look at the three-day trend prediction, and no matter how I slice it, I got overall bearishness. So the Larry Williams indicators confirm that and help that. By the way, Nicholas, I see you asking about the software month over month or over a year. We've got a lot of different packages, so if you want, just go to VantagePointForecast.com or give us a call. We put the phone number right into the chat, 1-800-732-5407. Happy to help. Folks, over on time, this has been valuable. And I say over on time, I try to keep these to about 45 minutes, but a lot of great chatter, a lot of great conversation. The forecasts come out, by the way, P-Check, at 6:30 p.m. Eastern Time. Monday through Friday for the stocks, Saturday and Sunday for a lot of futures and forex, cryptocurrencies. You get updates over the weekend. So it's 6:30 p.m. from a forecast. Yes, PSI is an indicator that can help you understand reversals. What you're looking for is what's going on from a trend standpoint. My PSI indicator is creating higher lows. If I connect those two lows, that is an inverse reading. those higher lows in between the ranges, Peter, are telling me bearishness is expected to continue. So I've got that bearishness, just to answer that one question. All right. Steve, thank you, sir. Appreciate that. Glad to see you. I didn't see you in earlier. Family member of ours I love chatting with. A lot of our family members are in here. If you are part of the VantagePoint family, let me say thank you. And for everybody that's in this session, thanks for letting me give you the view from my vantage point. I hope you have a fantastic day. Don't forget, CPI print tomorrow, 8:30 a.m., debate tonight. So keep that in the back of your mind. Manage your risk, manage your money, and good luck with your trading. Have a good day, everybody.